Hi James, how are you?
I'm very well, thanks Leo. How are you?
I'm great, thank you. James, I suspect you've had quite an interesting month throughout May. I wondered if you could let us know what markets have been up to.
Well, markets are continuing to recover from the big downturn they suffered due to the COVID-19 outbreak. With lockdowns easing around the world and businesses gradually getting back up and running, investor sentiment has improved. And last month, the MSCI World Index gained a further 4.7%. The index is now down just 7.5% for the year to date, which isn't that bad when you consider that at one point during March, the index was off more than 30% for the year.
James, has anything in particular done well in May?
Yeah, well, I mean, pretty much every major market did well during the month. So the FTSE 100, for instance, gained 3.3%. The Euro Stoxx index rose 4.9%. But overall, it's been the US that's dominated the recovery. So since the 23rd of March, which is when markets are at the bottom, the S&P 500 index has gained over 36%. And this is largely due to the domination of tech stocks. So the top 5 companies in the S&P 500 index are all big tech names. You've got Apple, Microsoft, Amazon, Google and Facebook. And between them, they now make up more than 18% of the entire S&P 500 index. And all 5 of them are currently on positive returns for the year, despite the market crash.
That doesn't surprise me, them all being in tech. And Jake let us know that you dug into the S&P 500 as well, so that's been interesting. James, is there anything that you see moving forward, anything you're expecting next month, this month?
Well, despite the ongoing market recovery, implied volatility is still much higher than its average level. So at the end of May, the VIX index was hovering around 30, which is much higher than its average over the last 10 years of around 17. So this means that there's still plenty of uncertainty over how much more of an impact the virus is going to have on markets and the economy. Obviously, the pandemic is still going. And another spike in cases will probably lead to another wobble in the markets. So we can't be complacent. In the multi-asset funds, we've got a nice diversified stock portfolio as well as broad exposure to a variety of markets. We've got very short duration fixed income exposure and also exposure to infrastructure. So we've got plenty of diversification.
Prepared for ongoing volatility?
Yeah.
James, thank you very much for the update. I'll speak to you soon.
Thanks, Leo.
Take care.